Sonio, the VP of Strategic Alliance at Metaco. Metaco Talks is a bi-weekly discussion of topical issues and thought leadership in the digital asset space and cryptocurrencies. It's live stream conversations meant to be interactive. So we do have the chat lines open, so please ask questions. Please feel free to ask questions. The recordings afterwards can be found on our website and will also be available on YouTube, Apple Podcast, and Spotify. Please subscribe so you can join our future events. And if you like what you hear, please leave a review. Now, today's discussion, very happy to have Alexander Bechtel, who will discuss the crypto business case for a bank. Alexander is the head of DLT and digital asset strategy at Deutsche Bank. Till last August, Alex was studying and teaching at the University of St. Gallen. He's been an external consultant to the ECB and a visiting researcher at Stanford University. And he's given up his life of academia to steer one of the largest banks towards its digital asset future. Welcome, Alex.
Thanks a lot for having me, Seamus.
So I would love to hear your journey from academic. And I think I've probably mentioned here also that you're on the opposite side of let's say the mic this time. You also have your own podcast called Bitcoin, Fiat and Rock'n'Roll. How you've gone from those roles to now a senior banker focused on crypto and DLT.
Yeah. So my plan was actually always to stay in academia and become a professor. And I invested a lot of time into my PhD in order to make this happen. So I think my PhD took me at least 5 years. And usually if you plan to go back to business after your PhD, you usually do this in 3 years. So it was not the most intelligent thing to do, to say, dude, let's stay in academia and invest 5 years and then go back to business anyway. But I mean, I started working on these topics also from an academic side, digital currencies, blockchain, etc., like 2 or 3 years ago. And I realized that there is so much happening in the business currently. And I think my impact can be way bigger on the business side than on the academic side, because academia, unfortunately, is always 4 to 5 years behind the business side. So that was one main reason for me why I decided to let's drop the academic career and start a career in banking and try to, as you said, steer a big ship like Deutsche Bank into the digital asset and currency world.
And how is that transition moving from academia to one of the world's largest banks? I mean, you're now effectively steering the super tanker. Is it a bit of a culture shock?
Yeah, I mean, of course, my day-to-day work has changed massively. I mean, before I was most of the day sitting in front of my laptop and thinking, basically, right? Doing data analysis, coding, and now most of my day is sitting in calls, which I don't like that much, to be honest. So I always try to block enough time because actually the actual work is still the thinking, I believe. And I always try to keep the calls as short as possible, but that's definitely something that has changed. Way more managing and talking and less thinking. And I'm trying to come back a bit more towards the thinking part.
Of course. I mean, and how difficult would you say it is to do something truly innovative in a large organization, a large bank as you're at now?
Yeah. So what I've realized is that this massively depends on the leaders in the bank. And I'm very happy that I have someone like Stefan Hoops within the corporate bank of Deutsche Bank who is really becoming a thought leader currently when it comes to blockchain and crypto. So he's brave enough to say, I have understood that there is something serious going on and it's time to react or maybe even act as a bank. And we need to get active and dive into that space.
And when we obviously, as a company, we talk to a lot of banks, and one of the things we always hear them struggle with is building the business case to get in this space. I mean, and obviously that's one of the topics we had in the title. How has Deutsche Bank gotten over some of the hurdles we always hear about the reputational risk of Bitcoin? It's too speculative. It's not a store of wealth. I mean, there's many arguments. There's a lot of FUD, and obviously we've seen a lot of your peers come to the market. They've addressed that. How has Deutsche Bank addressed that?
Yeah. So I wouldn't say that we have already completely overcome this. So we are still, of course, struggling and fighting with these problems. And these are still hurdles for us, in particular, since we are such a huge institution. So, I mean, our long-term plan is always we think beyond crypto, right? We want to play a part in this, I would call it, general tokenized assets and currency world. And I believe that there will be a bigger role to play in this world than the pure crypto world for banks, but still there is for sure also a role in the crypto world. But as you've said, when we talk about Bitcoin and other cryptocurrencies, it's less the problem that we need to get used to the technology. It's really more that we kind of need to get around these AML, CFT issues, right? Where does the coin come from? Who has hold it? What do we need to know in order to accept the token? And these are really things we are working hard on at the moment. Yeah.
Yeah, we've heard basically. I mean, there's obviously some great tools out there for chain forensics, but I think that the question is how to assess the risks based on that information, which is still a learning phase for all the banks, it seems.
Yeah, and I mean, I have to be honest. We are at Deutsche. We are really at the start of this journey. So we have started working on this more or less last August, and we are still in this learning phase. I mean, we have decided that this is an important topic, and we have started the learning phase, but we are still in the midst of it, I would say.
Just interrupt with a question here. We've just got a question. How do you manage innovative projects within a large organization so that they're not killed off by what he describes as the corporate immune system?
Yeah, I mean, that kind of goes into the direction of what I've said earlier, that I think what's necessary in such a big institution as Deutsche Bank is that the leaders of the bank are in, right? I think it's really, really tough if you work against your upper management. And that's something, by the way, I made clear before I started here. So the deal was actually I joined Deutsche and I said, let's maybe wait for 3 to 4 months before we talk about my contract. So I actually started working there 3 to 4 months without talking about any contract or pay, because I wanted to make sure that exactly this does not happen, that I run against walls for years. So I said, let's get to know each other for 3 to 4 months. And I want to make sure that you are actually serious about going into blockchain and cryptocurrencies and digital assets. And yeah, I mean, I'm still there, as you see. So I'm convinced actually that in particular the top management in the corporate bank is serious about it, and that I won't run against walls. And I mean, I can tell you a lot has happened within Deutsche Bank over the last months already. So I'm happy with how it's going.
What maybe start talking about more specifically what are the catalysts? I mean, to what degree is this getting involved driven by peers moving, client demand, or as you say, just having a vision of a future opportunity? I mean, what's driving the immediate business plan and catalyst to get moving?
Yeah. I always like to joke that it's only me who kind of made this all possible within Deutsche. That so much has happened over the last months, but to be honest, I think 95% is just the market sentiment and the clients. So yeah, I mean, starting with the Bitcoin price, which went through the roof over the last months, and I mean, of course, I think it's not a secret if I tell you that, of course, also our clients get in touch with us and ask us whether they can store their Bitcoins with us. I mean, we have many companies now starting to thinking about tokenizing assets, which of course contact us and say, let's do something together. So there is so much happening in the space, and so not only externally, but also internally, people are realizing we need to get active. And this, of course, helps me a lot in driving these topics internally.
That makes a lot of sense. I mean, I imagine we've seen a lot of banks look at, I guess, Bitcoin specifically as kind of a bolt-on asset, another product they can offer. But I mean, I think you mentioned basically looking at tokenization. So that, I imagine the core proposition around banks has really been around trust, intermediation, balance sheet. How do you look at that and what's happening in this new space, potentially moving from what's the financial system is really based on trust, intermediation. We have all these exchanges, everybody else, because we have no way to trade with each other. And now with the whole sort of DeFi stack, still early, but maturing, and you can see where it's going, potentially introducing a stack that's trustless, that, you can have peer-to-peer trading, peer-to-peer lending, peer-to-peer deposits, many of the functions that banks do. How does the bank look at that business model potentially evolving?
Yeah, so that's a good question, because in the end, I mean, blockchain is a direct attack to any intermediary, including or mainly financial intermediaries. And the question is, of course, is there a role to play for financial intermediaries in the future, in the future financial system? And I believe there is an important role. Otherwise, I would not have joined Deutsche Bank recently. I'm also convinced that the role financial intermediaries, not only banks, but financial intermediaries in general, is going to change, the role these institutions play. And I think it's one of the most important questions banks have to ask themselves: which role do I want to play in such a system? Because as you said, I mean, a certain fraction of borrowing, lending will be decentralized, clearing and settlement will be decentralized. On the other hand, I do not believe that we will wake up tomorrow and financial intermediaries will be gone, right? So this whole space is very experimental. It's super exciting. And I mean, if DeFi enables us to make our financial system more democratic and efficient, I'm all in for it, right? I think it does not make sense to endlessly improve the carriage if the car is around the corner. But the question I'm always asking myself, is it really that DeFi is the car and the current more centralized financial system is the carriage? Or is this maybe a bit too simplistic? And there is actually there are good reasons for both of them coexisting, right? And this is actually where I'm going, that I believe, at least for quite some time, DeFi might have a role in the system, but also CeFi, so centralized finance, might have a role in the system. And you see this already today. I mean, the main means of payment that's used in the DeFi world are centralized stablecoins, right?
Very true.
There are, of course, also decentralized stablecoins around the corner, but I mean, currently we're using Tether, we're using USDC, etc. So I'm convinced actually that many DeFi users in the future will use trusted third parties to store their tokens, for instance, right? So I think there are good reasons for CeFi and DeFi to coexist.
I think I have very much the same view around the coexistence and the need for trusted counterparties. I mean, not everybody wants to manage their own keys. As much as that's the theme, not your coins, not your keys. Yeah. It's a lot of responsibility, and it's not trivial. It's still a fairly complicated exercise. I think always having the option to manage your own keys is also a way to keep the system a bit more honest. Let's say, basically, a check on the system. You mentioned stablecoins. So how do you look at that space evolving from the banking perspective? Because when I look at, I think there was a McKinsey banking study last year about payments, and they talked about globally and Europe in specific, about 40% of bank earnings comes from payments. I would imagine looking at stable coins, that could be fairly disruptive there. How do you think that's going to play?
Yeah, absolutely. And that's exactly how we look at it. So when we talk about stable coins, we mainly look through the payment glasses on this topic. And yeah, I mean, stable coins are a nice way of bringing our current fiat monetary system into the DeFi or blockchain world. And we believe that this might be a role banks will be playing in the future as well, either by issuing their own stablecoin or by at least offering payment solutions for existing stablecoins. And this might even be a CBDC in the end, right? So for instance, our customers are, I mean, I wouldn't say that they are coming, that we have a lot of customers coming to us with this topic, but this is something the industry is communicating, that parts of their business processes might be running via a blockchain in the future. So there is a certain business process, and at some point in this process, there is a smart contract which triggers a payment. And I usually use an example by Bosch. When there is an autonomously driving car driving to a charging station, recharging, and at the end of the charging process, the car actually pays the charging station. So a classical machine-to-machine payment. Maybe this is going to run via a blockchain or a DLT in the future. And the problem is today, it's not possible to make the car pay this payment with a euro or a US dollar. Yeah. And we basically have two solutions to make this happen. So one thing we can do is to say, let's build a technical bridge or an adapter between the smart contract and our current payment rails, such that the smart contract can actually communicate with SEPA, TIPS, Target, whichever system is used in the end. And that's something we are working on. And I think this is a very interesting solution, because I believe it addresses most of the use cases we have in mind currently. But then, of course, the more elegant and frictionless solution to this problem would be to say, I mean, the smart contract sits on a blockchain. What the smart contract can do, it can move around tokens, right? So why can't we also bring the euro and the US dollar as a token onto this blockchain to make it really frictionless and to let that smart contract actually settle this payment? And then I believe we're in this stablecoin world where we say we somehow need to repackage our euro, which we as banks are already issuing, and make it available as a token on chain.
So it's really kind of the view about programmable money in many ways, right?
Absolutely.
And how do you see basically? I think there's many theses around how the stablecoin market will evolve. We've got obviously the things like Tether is obviously the largest, has a lot of traction, particularly in Asia, although there's some concerns about the credibility of it. Then we have things like the Circle's USDC, JP Morgan's coin. So a lot of different ways. And then we have Asia, or the DCEP project out of China, so CBDC, which is very much, I would say, if I'm a little critical, very much about surveillance and control. Mm-hmm. I mean, how across the spectrum of options is potentially a stable coin that's privately backed by US dollars is actually a way to sustain the kind of US dollar, or basically fiat, the Western fiat system? Or is that what's going to Is that the way we're going to go, or is there going to be something more kind of centrally sort of surveillance, sort of dystopic sort of potential of a Chinese solution?
Yeah. So I always like to distinguish between, when I talk about digital currencies, I always like to distinguish between three versions or forms of digital currencies, and they can be nicely distinguished when you look at the issuer. So we have currently, we have digital currencies that are issued by the state or by central banks. This would be CBDC, right? We have digital currencies that are issued by the private sector. So this includes the stablecoins you've mentioned, Tether, etc., something like DM, and maybe in the future also bank-issued stablecoins. And then a third version is like a form of a digital currency without an issuer, which would be the decentralized cryptocurrencies like Bitcoin, right? And again, coming back to the theme of coexistence, I believe that all three are going to coexist in the future, hopefully solving different use cases, right? We have Bitcoin. I mean, you can debate about what Bitcoin exactly is, but it could be something like digital gold or a decentralized form of a payment. You have the private stablecoins where for sure Tether is going to play a role. Maybe also banks are going to play a role in the future. And then you have the CBDCs, which are issued by the state. And I'm always an opponent of saying it's really important that when we talk about CBDC, that we think about which issues are CBDCs trying to solve. And I believe it makes no sense if CBDC becomes a means of another digital means of payment that enables us to, that gives us maybe the seventh checkout option on Amazon. So just to have another option to pay digitally, I think this is not interesting, right? I think CBDC should try to solve problems that are not being solved by the private sector or public sector today. And I always think of mainly two things, which is we cannot pay offline digitally. That's one thing that's just not possible today. And we cannot pay anonymously digitally currently. And whenever someone asks me, why do we need a CBDC? I always usually bring up these 2 points because this is something the private sector is not offering today. And I also do not believe that the private sector is going to offer anonymity on offline payments in the future because you cannot earn money with it. It's not something you can monetize, right? So that's actually a classical, I would call it market failure, right? The private sector has no incentive to offer offline payments or anonymous payments. And that's a classical task of the central bank in the end then.
It'll be interesting to see how they address that anonymous payments. I mean, as much as it's a market failure, it's also a technical hurdle, this offline payments from a digital perspective as well.
Yeah, absolutely. So I'm working with some colleagues. I'm working on a paper where we try to propose a way to enable anonymous payments. And at the same time, and that's actually the difficult part, because actually digital payments, digital anonymous payments are possible already today. Look at Zcash, for instance. What's not possible is digital anonymous payments that are regulatory compliant, in the sense that you need a certain threshold probably. And if you cross that threshold, the anonymity is gone, right? And that's actually the difficult part. Make it anonymous until a certain threshold, let's say 10,000 euro. And if you're across 10,000, it's not anonymous anymore, and that's the difficulty.
We had one question here. Why haven't we mentioned DAI? Anything about programmatic, decentralized stablecoins?
Yeah, no, that's exactly. So we had this topic. So currently, mainly Tether and USDC are used in the DeFi world. But I think if you're really consequential and say I'm in for DeFi, you should use DAI and not Tether and USDC. So I'm totally agree here.
Yeah. So we talked about tokenization of payments, but someone's also asked us here: do we see an opportunity for offering new asset classes through tokenization? And how do you identify these opportunities?
Yeah, so that's exactly what we are actually looking for as a bank, and we believe that this is going to be the most interesting thing happening in banking, or at least I believe that this is going to be the most interesting thing happening in banking over the next 10 to 15 years, that we will start to tokenize everything, maybe. So we are not talking only about tangible assets, but you could also think about intangible assets, right? Yeah. Future earnings. I mean, I believe there have been NBA players in the US, right? Tokenizing their future expected income, selling it immediately. You could think about students tokenizing their future earnings and like this financing their studies. So, I mean, almost anything is possible. And I mean, how do we identify the possibilities? I mean, on the one hand, we have customers and also partners that are approaching us with ideas, of course. And on the other hand, we are brainstorming here in-house and think about what's the most interesting thing for us. I mean, I believe this market is extremely nascent. There is not much going on. We're in a testing phase currently, but we definitely plan to be part of this testing phase and get prepared for hopefully when the market then flies at some point. Yeah.
That makes a lot of sense. I think we have very similar visions about what you can do potentially longer term with tokenization. We obviously see a lot of publicity around potentially tokenizing security markets. I mean, I would think for most of the Western world, security markets work pretty well. I mean, is that really is that one of the end games, is tokenizing the corporate structures that we know, or is it really about potentially using the whole concept of DAOs and how you could actually reinvent the corporate structure altogether, basically through this space?
Yeah, so that's a difficult question. So first, I believe that we will, like classical equity or stocks will be the last assets we are tokenizing, because as you said, this market is working very smoothly, a lot of liquidity, it's fast, it's cheap. So there is very little incentive to tokenize this market. So I think we will begin with less liquid assets, maybe things that are not even tradable today. So that's definitely something that is going to happen. Now, the question is, of course, how does the market infrastructure look like in the future? So will it be completely decentralized? Will it be centralized and maybe still organized by exchanges with, I mean, on permissioned maybe environments where certain banks and actors can join to trade? And that's for me an open question. And I mean, if any one of the listeners has a good answer, please get in touch with me, because this is also something I'm wrapping my head around. I mean, I believe for quite some time, both is going to develop in parallel. And I'm not sure if any of the two, like a more centralized trading venues and completely decentralized venues, are becoming the winner, or if this is also coexisting in the future.
I mean, one of the questions was exactly that. How will DB work with DeFi? I mean, one of the things I've often wondered is if you have this trusted infrastructure, but as you say, you have the ability, there'll still be a need for trusted counterparties. Is that a bridge for your clients into that space, and you can shift your model that it isn't so much balance sheet focused, is much more fee based? Is that not potentially a better model in the future?
Yeah, and I think something that's really important to understand is that our clients, I mean, I'm coming from the corporate bank, so when I talk about clients, it's mainly corporates, right? And corporates are not interested in doing all these financial, like borrowing, lending, etc., on their own. And we're not only talking about very simple loans, we are talking about way more complex stuff in the end. And a bank is more than only a gateway into the financial system. It's also a consultant, it's a partner, right? You do things together. And I think this may not be underestimated, that this is a very, very important reasons why our customers like to work together with us, because they appreciate our consultancy services around financial issues. And I think this is something that will also remain in existence in the future.
That makes a lot of sense. And given the eventuality, you say the last thing potentially you look at is things like securities markets. Looking at these other assets that you described, basically making the unbankable assets bankable, what's the regulatory environment for a bank to get involved with those type of activities? How do you read that market right now? How do you read the regulatory environment for that now?
Yeah. So I'm mainly observing what's going on in Germany, and we have now maybe soon electronic securities in Germany, which are made possible. We have, of course, the BaFin license, which allows us to offer digital asset custody. So for us as a regulated financial institution, it's of course the prerequisite to doing anything. There needs to be regulation. We cannot dive in, and this is also why we cannot become a big player in the DeFi space now, because it's pretty unregulated currently. So regulation always has to come first, and then Deutsche Bank and also other big banks, of course, can follow. So I mean, the regulatory space is something we are observing very closely. Also, for instance, the MiCA regulation, the markets in crypto assets proposed by the European Commission. And we are, of course, also giving feedback to regulators, what we believe makes sense and does not make sense. And that's currently, I would say, also for me personally, and seeing what's happening within the bank, one of the most important topics. How do we square this world and our business in this world with existing regulation?
And around the tokenization market, how long do you think this takes to actually become a reality, and to what degree is that part of the current business case, or is that something do you look at crypto and eventually the other one comes for free later on, or how are you looking at that?
Yeah, so I'd say we are looking at both currently. The big advantage of the crypto market is, of course, the market exists. It's growing quickly, and you have a business case there, right? It's very difficult to come up with a business case on tokenized art or tokenized real estate at the moment. So I mean, I'm not talking about Deutsche Bank now, but I think in general for financial institutions, what makes most sense is, and what I can observe, most of them are doing this. Start with crypto, get used with the technology, maybe start earning money in order to be then ready to go as soon as this wider tokenized assets and currency market kicks in. Because the big advantage, of course, is that the IT infrastructure, the underlying technology for classical cryptocurrencies and tokenized real estate is similar, if not identical to a certain extent. So we can already start making or gaining experience in the crypto market, which will then be very valuable for this wider tokenized asset market. And that's also something we need to understand in order to understand who will be our competitors in the future. And I'm talking now when I say I mean the whole banking sector, because I believe that firms like Coinbase will be a huge competitors for classical banks, because they are already in the crypto space for, 7 or 8 years. They know this technology, right? It's their business already, and they are trying to move into classical banking services. So I see them as one of the major competitors for the banking industry in the future.
That's an interesting point. Just earlier around your description of the evolution of the market, starting with crypto and moving into tokenization, is exactly what we preach very much, because that's what we see our clients do as well. Interesting comment about Coinbase. I mean, Coinbase is rumored to have, or we'll see when it actually goes for the direct market listing, potentially $100 billion market cap. That would put it in the top 15 largest banks in the world. You know, everyone's talking about them as competition, but their M&A is heating up in the crypto space. Any risk Coinbase buys a bank, or is that just buying too much legacy baggage and they can reinvent that space?
Yeah, I mean, interesting point. I mean, I'm not sure if Coinbase has a banking license already. I think they do. I'm not sure. I don't want to say anything, but I think this is something that is going to happen. If they don't already have one, I think this is going to happen. And then actually, I'm not sure if they have to buy a bank, because they are coming from the crypto side, and I think they can slowly extend their product suite towards classical banking products, but still, of course, in the DLT and crypto space. I do not think that. I mean, I can't speak for Coinbase, but I do not think that they want to go in the really classical legacy banking. I think it's way more exciting for them to think about products in the crypto space. And since we are also thinking about products in the crypto space, I think this is how we become direct competitors then.
Well, I mean, the valuation has definitely told them that they're doing the right thing so far. So that makes a lot of sense.
So it's impressive, right? I think it's Goldman Sachs size roundabout, and that's really impressive, and it shows that they are doing a good job. So I mean, just congrats to them. It's good to see that their business model is working.
So we don't have time for too many questions. One last here. So how is the identification problem with crypto tokens on assets outside the blockchain can be solved? You know, when you have several tokens pointing towards the same asset, for example. Is it a technological sort of solution or guaranteed by contract in the traditional space, or regulation? I think it's really about tokenizing real world assets, right? And ensuring they're not, multiply done in multiple times, like what we've seen in the commodity lending market, for example.
Yeah. So I think this is probably where the trusted third parties come in, right? And I think that's I'll make a general point, because I believe this is important. When we talk about Bitcoin can of course exist and work completely decentrally and without any trusted third party. And this is kind of where most of the people come from, I believe. But as soon as you connect the blockchain with the real world, it's almost impossible to make this work without any trusted third party. It can be an oracle, but in a lot of cases, and tokenizing assets is one of the cases, you will have institutions standing behind this. You have someone who tokenizes this asset, and there, as soon as real world comes into play and you want to connect real world with blockchain, there are trusted third parties which take over certain roles.
So there is a bridge of trust to the untrusted. That makes a lot of sense. Yeah. Well, I think that's all the time we have today. It's been a pleasure talking to you. Thanks for coming on the show today. Given you have a podcast, you're the bank, is there a way how can they find out about your podcast, and how can they reach out?
Yeah, so I have a website that's maybe, or you can simply Google Alexander Bechtel. I have a website with some information. The podcast, unfortunately, is only available in German, so at least for all the German-speaking listeners, you will also find that on my website. And otherwise, feel free to get in touch with me via LinkedIn. I usually try to respond as quickly as possible.
Thanks, Alex. It's been great having you on here.
Thanks for having me, Seamus.
Yeah. So thanks for joining. The next Metaco Talks will be on April 16th, because these are holidays. We're delayed a week. Our guest there will be Alexander Lipton. He's the co-founder and CIO of Sila. Sila is aiming to overhaul the financial service world by using advanced APIs and distributed ledger technology. That'll be a 1-hour special episode or special event of Metaco Talks, hosted by our CEO, Adrian Ciccani. So to then, thanks very much for joining.